Hi, this is Chuck Oliver. Welcome to this week's Taxes Saved Case of the Week. We've got a great case for you to review. It's actually going to be a two-part series. The first part is sharing, even in a no income tax state, how clients are able to offset their Roth conversion tax. But then also, then what does that mean as far as a lifetime tax-free legacy, as well as no required minimum distributions at a certain age? And then next week, we'll follow up and show you what the lifetime tax savings is. So let's look at how this case got started, Davis.
Yeah, this is an exciting one. For those who are out there, can you really zero out your tax bill for this week? Yes, this client's going to do that in a 2-year fashion. But they did get a zero tax bill. In fact, we're going to get a nice big fat 30,000 plus dollar refund for what they did pay in this year. But yeah, let's go ahead and hop into it. So I'll share my screen here as we do every week. And you'll see here, for those that are watching, right, we have the tax return on the left, and we have what the scenario is on the right, right? So these clients are out of the state of Florida. So they really only have that federal tax burden. So for those that are watching in different states that are, high tax places like Minnesota, New York, California, and some of the ones out there, right? This is going to be a scenario where the ROI would even be greater for you, right? So the ROI here is not as great on the short-term tax savings, you'll see. But again, this client was really gung-ho on just zeroing out their tax bill in whatever way possible, and that's what they did. So you'll see here of all the income added up on the screen here on the tax return. Yeah, it's a taxable interest here on 2B, some ordinary dividends, some IRA distribution, but the big one there was they did a conversion of about $343,000, right, of an annuity that was growing for them. And so you can see there, they also on line 7 had a big capital gain, about 156 grand, right? But line 8 is what the strategy they put into work and 2-year capacity. All that income added up to $529,000, 611 bucks, right? And they're going to face a tax burden were of $115,893, right? And about a 21.9% effective tax rate. So, right? Challenge getting rid of that, right? Getting this money converted of the money they have. So they decided they really liked the film they invested into, happened to be a Liam Neeson film they invested into last year. And that generated, they wanted to do a multi-year plan, right? So they really wanted to knock out all the income they could in being conservative of, the 500 and some thousand they had of income. So they used a good chunk of what they could last year and got rid of all of it, right? And so they invested 250,000 to now get 20 years of deduction worth over $1 million, right? But they're going to use this pretty quickly in a couple years, right? So year one, they use, as you see on line 8, 610,000, right? And they're carrying forward 453,000 to this year, where we're helping them Roth convert even more, right? And so we took them from that 21.9% effective tax rate to literally zero taxes due, right? And you can see here they're getting a refund of about $31,000 from what they already paid in, right? Which is exciting. It's always better to get refunds than just to owe something to the IRS, as we all know. And that's just the first year, right? So first year they get about 59% of their money back, beyond, just the tax savings alone, no other return included, right? And so then when we look at 2-year ROI, right? Because they're going to do, as we shared, more conversion than they already have this year, right? That's going to save another basically total $269,000 of taxes. So by year two, right, they've saved 108% on their investment in tax savings alone. And you'll see the exciting piece is the long-term benefits for this client, right? So they converted everything at zero tax cost, right? They're now in a movie investment that can potentially get them more return than just tax savings. And what's really big here is this money in this scenario. Let's say this 1,043 of what they're going to convert or have converted in now 2 years fashion compounds and grows, right? The market's been pretty good for this so far for 2025. And no certainty of where it goes, but so far in the Trump administration, it's performed well, as you know, Dad. And a lot of our clients are thrilled on that. In fact, they're so thrilled that they're saying, Where's my risk here?" And the risk is in the tax by not having this money growing, compounding tax free. So, like with this client, they played the game right, and now they have 1,043,000 growing. On average, we're being conservative here, about 10% growth rate, And by age 85, now this money is grown 100% tax free. They'll never have an RMD on it. They also won't leave a legacy tax to their inheritors, which is going to be huge, right? So we'll cover this in depthly of what their long-term tax savings are, having no RMD taxes, having no reinvestment taxes, and thirdly, that legacy tax, right? So if you're really excited to see the long-term ROI, you can please tune into next week's case study, as we'll be sure to cover that. Did anything else
Yeah,
you
we
want to touch on?
yeah, we try to just keep these to about 5, 6, 8 minutes. The way we look at it is, and I think a lot of our clients, it's either pay the IRS or use strategies in lieu of that that ideally get you a higher return, right? A lesser capital outlay than the taxes you would have paid. Even for the long-term planning, if the taxes you paid were the same, or in some cases even less, but we've only seen the same or more, then at least what you're putting your capital into has the potential for earnings as opposed to no return, obviously, if you just fork that money over to the Internal Revenue Service. So again, these are all above board, all, strategies that have been vetted and approved by our tax team. What's great is having a proactive tax team that not only understands the strategies, but they actually implement the strategies themselves, as well as our family and many of our client families do as well. So be sure to tune in next week for next week's Taxes Saved Case of the Month. For those that just kind of know, like, hey, I really want to see the tax risk road that I'm on, just go to taxessaved.com. That's TAXESSAVED.com and scroll down. And there's a place where you can actually request a saving tax optimization plan analysis. And this is a complimentary analysis where we actually spend time with you and show you the tax risk road you're traveling. And a number of you have taken us up on that all around the country. We're with clients all across this great nation. And people are like, wow, I had no idea this is what I was exposed to. The first step is understanding where you are so you can get and map out a better plan of where you can go. That's taxessaved.com, taxessaved.com.